You've driven for 15 years without a single accident, without a single ticket, without a single claim. And the moment you land in America, an insurance company prices you like you just got your license yesterday. That clean record you're proud of doesn't exist here, because in the eyes of every major U.S. insurer, your driving history starts at zero. Not because you're a bad driver, not because you're reckless, but because the system that decides your price has no record that you've ever sat behind a wheel at all.
Here's what's actually happening behind that quote you just got. U.S. auto insurers don't take your word for your driving record. They pull a report, usually from one of a small handful of national databases, that tracks every claim and every violation tied to a U.S. driver's license. If you've never held a U.S. license, that report comes back essentially blank. And a blank file reads to an algorithm the same way an unproven file does, as unpredictable, not as safe. Some insurers will also pull a credit-based insurance score, a separate number from your credit score that factors into your rate. And if you've just arrived, that file is thin too. In some states, insurers can't use credit-based scores at all, but in most, it's a real factor sitting quietly behind your quote. So you're not being judged against drivers with bad records, you're being judged against an absence of data. And absence gets priced as risk.
This is the part that catches people off guard the most. The price difference isn't small. Newcomers with spotless records abroad can see quotes that run 2 to 3 times higher than someone with an average, not perfect, average U.S. driving history. And the gap doesn't close on its own. Insurers re-rate you over time as you build a U.S.-based record, but that clock doesn't start until you're already driving here, paying the higher rate while the system slowly catches up to who you actually are. Some people respond by avoiding a car altogether, but in most of the country, that's not really optional. Work, groceries, childcare, almost everything assumes a car, so the cost shows up whether you drive or not. Others respond by underinsuring, just to bring the number down, which feels like a win until the first real claim. A surprising number of newcomers don't realize that minimum liability coverage, the cheapest option on paper, often doesn't even cover the cost of a single emergency room visit if someone else is hurt, let alone a totaled vehicle. There's a second layer to this that almost nobody explains. Location and vehicle choice get weighted heavier when your driver profile is thin, because the algorithm has fewer personal signals to lean on, so it leans harder on the signals it does have. The same car in a denser zip code or a car with a higher theft or repair cost rating can move your price more than it would for someone with 10 years of U.S. history offsetting those factors.
So here's what actually moves the number while that history is building. If you have a clean driving record in your home country, ask every insurer you're quoting whether they accept a foreign driving history letter or an international driving record. Some do. And it can meaningfully lower your starting quote instead of pricing you from zero. Get quotes from at least 3 to 5 insurers specifically, not just one, because how heavily each company weighs a thin file varies more than people expect, and the spread between quotes for the exact same person can be significant.